Many thanks for joining us once again on the program. I am Folashade Ogurinde. Latest data from the Organization of Petroleum Exporting Countries, OPEC, indicates that Nigeria's oil output dropped year-on-year by 23.8% to 1.024 million barrels per day in May 2022 from 1.344 million barrels per day recorded in the corresponding period of 2021. In its June 2022 monthly oil market report, OPEC explained that the figure, excluding condensate, was based on data obtained from direct sources. This showed that the nation did not meet its 1.753 million barrels per day May 2022 OPEC quota, despite its daily production of between 300,000 barrels per day and 400,000 barrels per day condensate. To make sense of this, Dr. Diran Faribe, the Chief Executive Officer at International Energy Services Limited, joins us now. Thank you very much for joining us. Now, Nigeria's oil output dropped yet again in May 2022. What do you make of this?
Well, we are not surprised. We are not surprised. This has been this is the situation because we've said up till time that Nigerian oil production has been declining, likely because of challenges in the oil fields in the Niger Delta or in the oil-producing areas of the country. And the reasons for this have severally been talked about, that the oil companies are not producing as much as before because of challenges in the infrastructure, in the oil fields. And this came about because of lack of investment over time. And as you will recall, for a long time, we've been talking about the uncertainty surrounding oil and gas investment in Nigeria because of the delay in the enactment of the Petroleum Industry Bill that was now signed into law as Petroleum Industry Act in August last year by our president. So the aftermath or the fallout of this was that there was underinvestment, over the years. By the time the bill was enacted or the act was passed by the National Assembly, the issue of transition into green energy now occurred. So the oil companies have now lost the incentive to invest in fossil fuel, and this is one of the things that is impacting on the facilities in the oil fields. So practically, we have aging facilities which require renewal, and also there's the need to in making additional new investment, which is not forthcoming. And to compound this problem is the issue of insecurity in the country, and particularly the oil-producing areas. This has contributed to the divestment of some of the companies in the country. You can imagine that a company that is divesting cannot at the same time be making new investment. So we are having these challenges that even though the oil price has been increasing, for quite some time now, but we have not been able to take advantage of this increase in the price of oil, which ordinarily in the past we used to use as spare capacity to produce more oil. And a situation where OPEC has given Nigeria about close to 1.8 million barrels per day, or about 1.77 million barrels per day as a production quota. But we have not been able to meet this target. Every month now, we seem to be going down. We only hope that the situation will improve. That's not to say, of course, that there is no effort being made, to improve the situation. The NNPC, through its subsidiary, that's MPDC, is trying to bring some fees into production, and they've gone into arrangement with a number of companies to re-engineer some of the facilities they built to bring in additional production on. So we hope that in the near future, Nigeria will overcome this declining of production, and we can now start to go up in our production trajectory.
Now, do you think this trend will continue, and what do you think must be done to reverse it?
No, you see, it's not in our interest. It's not in the interest of the country that we continue to experience this. It's just unfortunate that this has persisted for quite some months now, that we continue to experience the declining situation. But I believe government is not sitting down with arms folded, or NNPC that is working for government, agency of government in this direction, will not fold its arms to see that we continue to experience this, because if we continue to do so, then it's at the expense of our treasury, or the expense of the revenue of the country. And this is the time we need revenue very badly. And as you must have noticed or heard, the finance minister said at one time that the subsidy on fuel, that is petrol, is has gotten so much money that it's even surpassing the production. If, for example, we are producing 1.7 million, 1.8 million barrels per day, this situation, the viewpoint will not be the same in terms of payment of subsidy, overshadowing the decline the production level in the country. So the NNPC and the Ministry of Petroleum, will have to address this realistically, with a view to reversing it. And like I said before, it's just unfortunate that this situation is coming at the time that there's underinvestment, in fossil fuel, whereby the oil companies are not making additional investment. But the government would now have to re-engage the companies, at least to be able to put more money into developing the existing fields, if ever not much money is put into exploration, because that is the crux of the matter. When you are not investing in exploration, there will be a time when your production will start to decline, because there's the additional oil will have to be brought in to be able to beat up your increased production. And you will, in the past, when there is a high demand for oil in the world market, we normally rely on our production capacity, spare capacity, and that you may remember, there was a time many people used to complain that Nigeria should leave OPEC, because we thought we could produce more than OPEC was giving us as a production quota. But the reverse is the case now, whereby OPEC is now complaining that Nigeria, and among some other countries, is not meeting its production quota. So this cannot continue to go on without the situation being reversed, at least for the sake of our national economy.
Now, OPEC increased Nigeria's oil quota to 1.772 million barrels per day for June, from 1.753 million barrels per day for May 2022. Will this have any direct impact on Nigeria's ability to meet its crude oil production quota?
No, you see, it's like I said before, it's not in our interest for this to happen, because we don't want a situation where we re-engineer our production trajectory, and then OPEC is now restricting us at the time that OPEC is encouraging us to meet our target. Because if we persistent, in not meeting our target, time will come when our quota will be reduced substantially, and which will not be in our interest. And at the time that we need the money very badly and we want to increase production, then our quota will will not be up to the level that we want to produce. So that's why the authorities, will have to do all that is humanly possible to ensure that the declining trend is reversed, and that will mean that we have to re-engage the oil producing companies, and then in terms of looking for additional investment. It's interesting that NNPC recently, was able to source a fund from Afrexim, it was $5 or $6 billion, mainly for to revamp, production. And with NNPC Limited going into operation now, and that will enable NNPC to go to third party, to the capital market, and then raise additional funds to be able to increase our production level if the oil companies are feeling reluctant to make new investment. So the ball is in our court now. The ball is in the court of NNPC. If the international companies are not doing as much as we expect them to do, then the NNPC Limited, should now fill the vacuum and start to increase production from some of the fields. And it is interesting that some of the fields are being taken from the major oil companies. Although it's, I know there's a time lag between the time you take over some of these and the time you can actually increase production, because there will have to be some re-engineering to be done in the various oil fields for you to be able to bring production on stream.
Now, crude oil output increased in countries like Saudi Arabia, the UAE, and Kuwait, while production in Libya, Nigeria, Iraq, among others, declined. What lessons must we learn from Saudi Arabia?
So, for one thing, I think the incorporation of NNPC or formation of NNPC Limited is with a view to making NNPC Limited a commercial enterprise. And they will be following the footsteps of companies, national companies like Aramco of Saudi Arabia. Now, in the past, Nigeria used to talk about spare capacity of production. That is, whenever there is a call for increase in demand, in supply for oil, we are able to meet quota. Saudi Arabia has a large reserve, and also has spare capacity, which can easily be brought into production over time. And then there are quite a number of countries like that, like Kuwait, like UAE, and so on. Countries like ourselves, we know that we don't have as much spare capacity, even to exceed our quota. But it hasn't been like this, that we were not even able to meet our quota, because quota is normally established on the basis of our reserve and a sustained level of production over time. That's what OPEC would normally use to calculate the quota given to member countries. And some of the other countries that are suffering from this same problem we have, are having declining production, and they are to a large extent, declining reserve. Over time, experts and industry operators have been warning that if we are not careful, we will get to a point where we will not be able to meet our quota, because if we are not investing in exploration and adding more reserve because there's a production reserve ratio, that is, there's a level of reserve you must have to maintain certain level of production. And if your reserve is declining, obviously it will affect your production level. And that is we did not take heed to this warning. And like I mentioned before, the factors responsible are well known. The problem of insecurity in the oil-producing areas, as well as underfunding of underinvestment. So these are major contributory factors to the situation we have now. And then we did not take the warning seriously in the past, and that's why we are reaping the reward. But and to compound the problem is the issue of transition from fossil fuel, into green energy. So what we need to do now, and the campaign is on, that the West will be unfair to oil-producing countries, especially in developing countries, by switching investment funding to green energy and not allowing developing countries to produce the oil they have. Because, okay, as of now, we are said to have about 37 billion barrels of oil, across the various terrains in the country. Are we going to drink the oil? We have to bring the production, the oil into production for our own development. And their problem is now being even compounded that instead of refining our crude oil locally, we are importing petroleum products, which is dropping a lot of money in the form of subsidy. And that is a double jeopardy. So we cannot afford to allow this situation to continue. Otherwise, a lot of problems will come and will arise as a result of not having enough revenue to meet our developmental goals in the country.
Well, Dr. Diran Fawibe, the Chief Executive Officer at International Energy Services Limited, thank you very much for your contribution. Well, we'll take a break here, but Money Matters returns shortly. To stay with us. Welcome back. Nigeria's inflation rate has reached its highest level in 11 months as National Bureau of Statistics (NBS) reports that consumer price index for the month of May increased to 17.71%. The growing inflation numbers continuously put a strain on purchasing power of Nigerians as the value of money keeps eroding. Food inflation, the closely watched index, rose by 19.5% year-on-year in May. Food items such as bread and cereals, potatoes and yam, among others, increased in price. So how does Nigeria's rising inflation affect you? Johnson Chukwu, the CEO of Kari Assets Management Limited, joins me now. Thank you very much for joining us. Now, was the rise in the May inflation rate an expected development for you?
Thank you for having me. It was most expected that the inflation rate will increase, given the many factors that are pushing up inflation in the country. Let's start from the external factors. We know that the war in Ukraine has led to a spike in global inflation figures as a result of the transmission effects through the energy sector, supply chain disruptions, as well as increase in food prices, global food prices. And these items, Nigeria is not isolated from them. We've seen the price of energy input like diesel skyrocket about 760 naira per liter at the depots, and at the filling station of up to 800 naira per liter. This will have direct impact on the cost of production in the country because most businesses run on generator, given the paucity of supply from the national grid. Then you have to look at the issue of inflation caused by high food prices globally. We know that between Russia and Ukraine, they produce about 30% of the global wheat production. Ukraine accounts for about 50% of grains produced globally, exported globally, and also account for a significant portion of corn. Again, if you now bring it down to the local environment, you also have to deal with displacement of farmers within the local farming zones, which is why we saw a spike in food inflation to 19.5% in the month of May. And the impact of that food inflation, which accounts for more than 50% of the consumer price index, is what pushed up consumer prices to, average consumer price, or CPI, or inflation rate as you call it, to 17.71%. So it was most expected.
Now, for subsequent months, should we expect a steady rise in inflation rates?
It was most expected. And I don't think we've seen the worst because if you look at other countries, some countries are their 70-year high inflation rate. We've seen US inflation rate in May at 8.6%. United Kingdom is about 9%. Germany is about 7.9%. And on and on, you can see virtually every country is going through some inflationary pressure. So you have to contend with two factors, the endogenous factors, which are homegrown issues that have to do with insecurity in the country that has impacted negatively on food production, and then the endogenous factors, which includes the price of energy sources, diesel, and particularly food items, as well as the depreciation of the local currency. If you look at the parallel market window of the foreign exchange market, you will observe that we'll see the depreciation of Naira and in the region of 603, 604 Naira per dollar. And remember that an average trader or an average business person will price their imported items using the parallel market rate. These are the facts. So it shouldn't come as a big surprise to anybody that inflation rate has gone to 17.71%.
But how badly do you think this will affect the average Nigerian?
Because of low income level of most households in the country, food has the highest share in their household expenditure. So any increase in the price of food items will mean that households are no longer able to afford the same basic quantity of food they used to eat. And again, you're also going to see that there will be a shift in their income, most of it going into food items. So which will mean that their ability to meet other basic needs will be weakened. So as it stands today, if you look at the current food prices, and then you look at the fact that we've seen a 19.5% increase in food inflation, you will eventually go see situations where many households are not able to meet up their food needs, their standard of living will deteriorate, and some of them may actually have to transfer or adjust their lifestyle. I was speaking to some people earlier, and they are also concerned that some even may have to withdraw their children from school because they have to feed them first before they send them to school and pay school fees. So food inflation is practically more damaging in third world economies where the per capita income is already low and income distribution is already weak.
The Russian-Ukraine war is still ongoing, and it's still unclear when the war will end. But the impact of the war on Nigeria is still quite alarming.
Well, if we're able to restore some level of stability in our security situation so that local food production will, to some extent, offset the shortfall in supply, as Nigerians can't afford. As the prices increase, international prices of wheat continue to increase, many households will ordinarily want to switch to locally made food, eating substitute items. But unfortunately, we're also dealing with challenges of food production within the local economies. I had pointed out earlier that Ukraine accounts for about 50% of cereals produced globally. And between Ukraine and Russia, they account for 30% of the entire wheat production in the world. And wheat is a major component for bread production. So if the war is not addressed, we should actually expect a worsening of the current global inflationary pressures as it relates to food inflation. Of course, there are also other pressures coming from energy supply sources. But critically discussing food inflation, Russia is actually, Ukraine is considered as the food basket of Europe, and Russia is a major component in supply of food and food items, other food items, including fertilizer that is also used for food production. So I hope that the war will not last for too long, but as long as it lasts, it could not disrupt global supply of food, global supply of energy, and the pressures on inflation will continue to be there.
Johnson Chukwu, CEO, Kari Asset Management Limited, thank you very much for your time. Thank you for your contribution. I need to wrap on the program. See you again next time. Bye for now.